Crompton announces a rejig in the top management. Stock falls over 10% on concerns that the new CEO, Promit Ghosh, may not have the requisite operational experience to take over as CEO.
Ipca Labs will acquire 33% stake in Unichem Labs in a transaction worth 1,000 crore rupees. The board has also approved an open offer up to 26% stake in Unichem Labs, priced at around 440 rupees a share. Ipca stock is down close to around 8% as the street believes they have overpaid for this acquisition.
Biocon and Serum Institute withdraw from their original deal structure. As per the new structure terms, Serum's $150 million loan to Biocon will now be converted into equity in Biocon Biologics, and Biocon's Kiran Mazumdar-Shaw tells CNBC-TV18 that the deal will now be done at a valuation of $6 billion versus $4.9 billion in 2021.
Food delivery aggregator Swiggy as well as Zomato introduced monetization plans for their dining out segment. Citi issues a bullish note on Zomato with a target price of 76 rupees. The stock is up 5.5%.
Some other stocks in news. We have IIFL surging almost 8.5% after reporting a strong set in their fourth quarter numbers. Welspun India too rallies about 3% after announcing that the board will consider a buyback on the 27th of April when it meets for its numbers.
Hello and welcome to Chartbusters. I'm Nigel D'Souza, and joining me as always is Mangla Malu. Well, the markets, they've recovered from the low point of the day. The intraday low was around 17,716. As we speak, we're around 17,760. So we're up close to around 40 points from the day's low. What's holding up? Well, the Nifty Bank. That's been the star, and that continues to remain the star even today. So just keep an eye out on that front. And also the crucial one that you need to track today is the Nifty Financial Services Index. You know, it went a little bit lower at the start of trade, but that's recovered. That plays out expiry today. So you need to track that one. And if it holds on to, say that 18,800 odd levels, then you'll believe that it's good for more. The financials have been driving it. So that's why keep an eye on the Nifty Financial Services Index, because that's the one that has an expiry today. The contract expires. And the Nifty Bank as well, which is leading the way. Mangla.
Yes, Nigel, on the Nifty Bank itself, I'm watching out for some sort of outperformance continuing. And the biggest reason for that is yesterday it was the key outperformer. Yeah. And yesterday, post-market, we got the data, 1,100 crore worth purchased by the FIIs in index futures. But of that, in the Nifty Bank, it was only 150 crores. The rest, 900 plus crores, 950 crores, was attributed towards Nifty. So is there a case for some more shorts to cover on the Nifty Bank rather than the Nifty itself, or some more long positioning added there is something that we'll be watching out for. 42,755 holds on the Nifty Bank. The other thing I'm watching out for are a bunch of FMCG stocks. HUL reports its numbers day after tomorrow, and this time around, after a very long time, the numbers will be in the market hours itself. The press conference is slotted for 1 p.m. in person. So the street is expecting, some sort of news coming in on HUL. 5 to 6% volume growth is what is expected. So stock recovering from lows. ITC continues to be the star of the show in the FMCG pack, doing extremely well. And the broader names as well, broader market names doing extremely well. We have Marico, which has moved to the high point of trade. And alongside that, we have Dabur as well, telling you that the prospects of rural demand may look better going forward. So we'll keep an eye out on these counters. Of course, all of this, before all of this, we will have Nestle and Tata Consumer reporting their numbers today itself. So talking about the consumption space itself, we have our special segment where you get you a few ideas of profit coming in from Money Control Pro. Sachin Pal joins in with a stock that he's been tracking, consumption related.
The company in focus is GM Breweries, which is a country liquor manufacturer operating in the Mumbai metro region. The company came up with its Q4 numbers a couple of weeks earlier and turned out to be a solid set of numbers in terms of the top line. The company clocked the revenue was almost 10% year on year, and it turned out to be the best quarter in history of the company in terms of its sales. On the margins front, the company's margins were under pressure during the Q1 of FY23 due to concerns around the high oil prices as well as the inflation around the agricultural commodities. However, the margins of the company have been very stable, around 20 to 22% since on account of the correction in oil prices as well as the agricultural commodities. Going forward, the margins could see some pressure from here on, given that the company is facing some challenges in terms of the sugar production output for this fiscal year, as well as there are concerns around the El Nino front. The demand outlook remains very robust, and the company remains well positioned to grow ahead of the industry going forward. At around 9 times FY24 estimated earnings, investors can look forward to acquiring the stock at current levels.
All right, thanks a lot for that, Sachin. Well, let's move on then. I think we have our first guest on the show, Mr. Keshav Bhajanka, who is the Executive Director at Century Plyboards. He's joining us to discuss the outlook for the business going ahead. Hi, Keshav. Good morning. Thanks so much for joining in. Well, I wanted to ask you about the MDF business first up, because that's what the street believes there's going to be big growth out there because of the under-penetration here in India. Could you tell us, was there any changes in the MDF prices recently? If yes, by how much? And also, has there been any movement on the ADD for the MDF business? Run us through that.
Good morning. Thank you so much for having me on the show. Yes, MDF, as you correctly mentioned, is a growth business for the future due to the low base in India. And it is an area where we are heavily investing. We believe that there is scope to grow it rapidly, and we are trying to maximize the growth potential for Century Ply. Having said that, the current pricing scenario, there is no change. There is status quo. There might have been certain slight reductions of price in the south and other parts of the country, but the north market, which is our largest market, currently has no changes in pricing. And on ADD, there is a very strong case for ADD that is building up. But, progress on these issues does take time. So there is no major change as of now.
All right. So you say there are no changes in prices in North India, but there could have been some in the southern part of the country. Could you give us a sense of whether it's on the way up? If yes, how much? Because for you, the first 9 months, realization were close to around 31,000. What would it be for the southern players? And I ask this not particularly for y'all. Y'all are in silent period, obviously, but for the industry as a whole, because a couple of days ago, we did see big spikes in the share prices of green panel industries, Rushil Decor, predominantly southern players.
See, in the south, there is a distinct advantage of raw material being cheaper than the north. So in the south, slightly lower prices are still lucrative because of the raw material advantage. So the prices are not on the uptrend right now. They've been either consistent or in some parts, they've been slightly lower. So I don't see any increases in the very near term.
Okay. And what about the ADD? You said, of course, there is a strong case, but is there any visibility in sight? Have we all spoken to the authorities? Have you all got any timeline? I mean, is there any ADD coming in the near future? Just wanted to understand the timelines.
Well, we're working on it, and hopefully. But, these are things that are slightly out of our control. Of course, we're working hard towards it. And like I already mentioned, there is a strong case towards it. But as you know, timelines, it's very difficult for me to comment on the timelines at this point.
Okay, so let's work with what we know then, Keshav. Tell us, if it's a strong case, I'm guessing there'll be a pricing difference. So what is the domestic MDF at, and what is it getting imported at? I'm asking you that because I want to understand, if there is an ADD that's imposed, then what percentage will be enough, in terms of a rate? Go ahead.
You see, I think the primary reason behind ADD coming to play would be that the raw material price in other countries is very similar to that of India, and perhaps slightly higher as well. So considering that the prices for MDF landed in India are coming to about 10% lower than what is being sold at currently by domestic players. So I think that because of this, there is a strong case. And going forward, it should be a double-digit duty.
All right, a double-digit ADD because the price difference is about 10% odd. Just wanted to know, there is a fair amount of supply which is going to come by in the industry, in the MDF space itself. You have your Andhra plant commercialized. Everyone else also has their, capex plans. But just wanted to know, how will the geographical spread of this be? And at the same time, will there be any sort of impact on the realizations for all of y'all? Because eventually y'all will be chasing the same big customers, right?
In MDF, we have seen that a price war normally leads to a net loss gain. And most of the players have already suffered from this. Alongside that, setting up a capacity and utilizing the capacity are two different things. So I don't foresee too much of a price war going forward, to be honest. And in terms of the capacity ramp up, I think we will be able to ramp up our capacities fairly fast, as we did with Hoshiarpur. At that point in time, if you remember, when our first plant came into play in 2017, the same questions were being raised. But like I had guided then, that setting up a capacity and utilizing a capacity are two different things.
All right, Keshav, let's focus on business then. Slowdown is the new buzzword. Any slowdown or not really? And given what you're picking up in the initial month of this fiscal, revenue growth potential, I think 20% is what you were guiding for. Tell us, what are you looking at in terms of growth for FY24?
I think we have been very, very consistent that our objective is to grow at 20% year on year, and that target does not change. It's still too early, judge the trend, because March normally is a very big month. But what we are getting as feedback from the retail channel is that yes, there is some pressure. It is caused due to the increasing interest rates and a slight, difference in working capital, the ability to service. There is a bit of a liquidity crunch. So I think that is affecting demand in general. However, I think we are faring better than most. This is where the power of the brand is actually pushing through.
So 20% is what you'll... 20% is what you'll hold on to then, Keshav, right? Because of the measures that you're taking.
Yes, to put it simply, we will be looking at 20% growth for the current financial year as well. All right, and final question, then, apart from MDF, your core business is the plywood business. How have things been out there with regards to pricing and with regards to operational performance?
We have taken a slight price increase in plywood in the last quarter. This is due to raw material pressure. But I think in plywood, we have a fairly robust growth roadmap ahead. So we have always guided that we will be growing a double digit in plywood. I think we are largely going to be on track with that. So in plywood, being the largest business, I think double digit growth is going to be a realistic assumption for the current financial year.
Okay, all right. Keshav, plantation is likely to be lower. That's what could keep timber prices elevated, right? Could you tell us how you see it panning out, say for the next few months, say 6 to 9 months? It's likely to remain elevated, or for the full year?
I think it is a very difficult task to predict timber prices in the short term. But I think the timber prices are fairly elevated, and this is very good because it leads to plantation. Like you said, plantations have been lower. The reason for that has been low timber prices. Farmers are not getting the desired realization. Now, if you look at the north, timber prices have jumped from anywhere between 3.5 rupees to close to 6 rupees. This jump is going to aid in adding drastic amounts of plantation. Agroforestry is now far more lucrative. So in the long term, it is going to be very good for the economy and for the plywood MDF industry as well. But in the short term, yes, there is some near-term pressure.
All right, take that point. Typical agri problems where you have where the prices are low, the plantations are low, and when plantations are low, the prices increase, and thereafter plantations increase as well. So that's a cycle we will keep monitoring. Thank you, Keshav, for joining in. The good part is that you hold on to your revenue guidance. And as we speak, in fact, apart from Century Plyboards, we have the numbers of Nestle right at the bottom of your screen. Net profit coming in at 736 crores. The street expectations were close to around 760 odd crores as well. The revenue looks like a bit of a beat, 4830 crores. This compares the poll of 4460 crores. And the net profit also is actually a big beat. We were working with a number of 675 crores. The company has gone ahead and reported numbers of 736 crores. So from a top line and a bottom line standpoint, this has been a bit of a beat. I'm just trying to get some more details in. The EBITDA should come up for you this time around. The worry was that increasing dairy prices could impact their margins this time around. Will that be the case or not? We'll just get the EBITDA in a bit. But from the two numbers that we have at the bottom of your screen, they look like a bit of a beat. 4830 crores on the top line compares with our polls of close to around 4600 crores, and the net profit also above our estimates by a good 10%.
Well, interesting, Manglam. We'll wait back for the EBITDA number. Yeah, that's as well has come in much better. That's a beat of close to around 70 crores odd. And as Manglam has been pointing out, for the last few quarters, the gross margins from around that 57% had come down to around 54% or thereabouts. But for the timing at least, the EBITDA margin that we have got, well, that's better than what we were estimating at least. So let's see how this plays out. For the time being, the margin number is more or less in line. Or actually, in comparison to our poll, I think it's a little bit lower. That's the margin. But the absolute revenue is much better. The absolute EBITDA number as well is much better. And the top line beat has further percolated down to the PAT profit as well. Mangalam, anything more you're picking up?
Well, these numbers are extremely strong, Nigel, whichever way you cut it, because you have the revenue growth coming in at 21.3%. Most of the street were expecting around 12 to 13, 14% as well. But 21.2% domestic sales growth, 21.3%, total sales growth is a big positive. Over and above that, if you just take a look at, other prices, other products as well, the prepared dishes and cooking aids, which basically includes the Maggies of the world, delivered strong growth across all products in its food portfolio. Growth momentum was also aided by market presence, media campaigns, and focused consumer activations. This was an important problem for Nestle this time around, because what had happened was the 5 rupee Maggi, they had increased the price from 5 rupees to 7 rupees, whereas Yippee kept its price at just 5 rupees. So the street was worried that Maggi may lose some sort of market share out there. But if this business has done strong growth, that means Maggi's held on to its brand and market share as well. Milk product, of course, was expected to register strong growth because of the milk prices inflation that we've seen. Confectionery did extremely well. The chocolate category is doing well. And Nescafe recorded its highest market share. So those are factors which are doing well as well. The management says they're witnessing early signs of softening in commodities such as edible oil, wheat and packaging material. However, cost of fresh milk, fuels and grain coffee are expected to remain firm because of continued increase in demand and volatility.
Okay, all right, Mangalam, I'll give you some more time to ponder over those numbers for the time being. Let's get in Naveen Kulkarni of Axis Securities, who joins us on the phone line. Well, Naveen, good morning. Thanks so much for joining in. Mangalam says this number looks like a cracker. As yummy for you as well?
Yeah, could you just repeat the EBITDA margin number for me?
The EBITDA margin is around 22.7%. That's flashing for us on the screen. The revenue number is around 4,830 crores. That compares with around 4,450 crores that we were working with. Absolute EBITDA number is around 1,098. That compares with what we were working with of around 1,030. And EBITDA margin, as per our calculation, is around 22.7%. Naveen, go ahead.
Yeah, so the EBITDA numbers are clearly a beat on our expectations. So I think those numbers are good. But the margin, I would say that still looks a tad below expectations. So we were looking at around 23.4% margin. I think the margin is slightly lower, but I would say that still the EBITDA numbers are slightly better than our expectations. So overall, it's looking good to me.
All right. Naveen, in light of the valuations at which Nestle trades at and the triggers that they have with regards to, expanding their distribution through Rurbn, they have the CapEx plan of over 5,000 crores as well. What are your thoughts? I mean, how should one approach this stock from here? These numbers, one quarter data point that you have, but from a long-term standpoint, how should you look at Nestle?
Yeah, so see, Nestle for the last actually 2 quarters has been reporting good set of numbers. So the way to look at Nestle is that what do I own in FMCG as a sector as a whole, right? So if I want to have exposure to FMCG sector, what would be the likely candidates? In that scenario, Nestle, from its overall product profile and the category which it operates and the consistent growth rate, I would say that it fits quite well. Challenge only continues to remain is the elevated valuations. But overall, I would say that Nestle will continue to grow ahead of the market. So from that scenario, having an allocation in Nestle makes a lot of sense.
All right. My sense is that the other expenses this time around were higher than what the street was anticipating, because I look at them and it's around 1,020 crores. This compares with the sale of net revenues of 4,800 crores. So that's about 21.2%. So do you think some of those raw material issues that the company faced earlier and, some savings out there have been reinvested into, increasing their market share and marketing spends? Because as a percentage of sales, other expenses have increased. Would you have any thoughts on this?
Yeah, it's very much possible, right? So because considering the kind of revenue growth that we are seeing and let's say that probably some bit of price hikes that they would have taken. So the spends on marketing and other expenses could have increased also, right? So that's something which is very, very likely. So as I was saying, overall margins look slightly lower to me. I would say that EBITDA margin profile looks slightly lower. But other than that, I would say that the company is delivering better than expectations.
Right, quarter on quarter, we have seen a bit of a slip in gross margins as well. Gross margins have come in at 53.5%. This compares with the same time last quarter at 54.5%, and the same time last year at 55.4%. So there has been a rough 200 basis points dip in their gross margins, which is why maybe the stock has come off highs a little bit. Important to watch out for demand as well going forward, because 21% revenue growth, Nigel, is the best that the company's posted in the last 10 years.
Wow.
And if you excuse, of course, for the Maggie crisis, the low base that happened and thereafter there was a big jump, because the management says that 21% quarterly growth is the highest that they've seen in the last 10 years.
Well, and Mangalam, I think the stock in this month itself is up 5%.
Yeah.
So maybe part of that good news for an already expensive stock could be in the price. It's outperformed the Nifty, particularly in this month. If you pull up a 1-month chart of Nestle as well as the Nifty, you'll get that picture up for you on the screen. So we've heard what Naveen had to say. Let's get in Abneesh Agarwal of Prabhudas Leeladhar, who joins us on the show. Hi, Abneesh. Thanks so much for joining in. What do you make of these numbers? Prima facie, the first numbers that flashed look like a beat. And Mangalam says as well, the read-through is positive. Your view on the stock?
Yes, your top-line growth has been, I think, if you exclude some, you can say, COVID-based quarters or in the past, I think the top-line growth is really encouraging. The gross margins, as expected, they are, I would say, under some sort of a pressure. So I think the key here is that some of the raw materials for the company like milk, they continue to move up, so the pricing will remain with them. And I think going forward also, I think the margins is something at the gross level which one shouldn't expect that they will improve. But yes, if they can maintain some sort of a top-line momentum, and one actually needs to look at what kind of volume growth is there. Because Nestle, maybe excluding these recent 1 or 2 quarters, has been growing volume at least by, say, your mid-single digit or close to 8, 9, 10%. So I think overall the numbers seem to be quite positive, but yes, the valuations have been expensive. And given the fact that the company is going for a massive, you can say, expansion plans, so I think the stock will give you, you can say, moderate returns from here.
All right, moderate returns coming in from Nestle is what the expectations from PL are. Thanks a lot, gentlemen, for joining in and giving us your views on the Nestle, results so far. In case you've just tuned in, the Nestle revenues for the company have been much higher than street expectations, over 4,800 crores, 21% growth in their overall revenue this time around. And the net profit too has beat street expectations. The EBITDA, while on a margin front, has been slightly below. At an absolute level, it has been above street expectations as well. 737 crores is the net profit that Nestle has posted. 4,800 crores on the revenue, a little over 1,000 crores, a little under 1,100 crores is what the company has posted as an EBITDA. Management commentary strong, though the stock off highs for a couple of factors. One, maybe the street does not like the margins. Secondly, they do not like the valuations at which the stock trades. And thirdly, we had already seen a big move in the stock ahead of numbers. Take a short break, come back, get you more on the markets after this short break.
Well, the markets are moving a little bit higher in the last few minutes or so. Eicher Motors has moved to the high point of the day. Infosys has made a good comeback, and that's a larger weight on the index. So I think IT for the second day running is showing some signs of stability. Whether it lasts or not, well, time will tell. But the Nifty IT index is actually higher in today's trading section. Well, let's get in a technical voice. Then Shilpa Rao joins us. Hi, Shilpa. Good morning. Thanks so much for joining in on short notice. Well, tell us, Shilpa, how do you approach the index? The data that we got yesterday suggested that we have more unfinished business on the upside. Do you concur? And what are the levels you're looking at?
Good morning, Nigel and Mangalam. Rightly said, data is looking very positive, and Nifty, if you see 17,800, 17,700 PCR is rising now, which indicates that we have a lot of strength, and we will see targets of 17,950 to 18,000 zones in a few sessions. Likewise, Bank Nifty, it has now held up to this 42,500 zones very strongly. Very strong put writing happening across the next few series, which means that, we will see the upside targets towards 43,500 to 43,800 zones also very soon.
Okay, all right. Shilpa, run us through your picks before we wind up.
I have two buys. One would be in Ultratech Cement now. Ultratech Cement futures current series trading at 7459. Put a stop at 7420 and look for targets of 7510 to 7540. The other one would be a buy in ICICI GI. It has a strong base at 1068 zones. That would be the stop for the day and targets of 1090 to 1094.
Okay, all right. Shilpa, thanks so much for stopping by, giving us your view on the index as well as a couple of your stock calls. Well, on that note, though, we'll have a wrap up on this edition of Chartbusters. You stay tuned. Trading Hour comes up next.